Welcome. Today, we're diving into the world of Bitcoin, a term you've probably heard countless times in recent years. But what exactly is Bitcoin? Why has it captured the attention of investors, technologists, and even governments worldwide? In this video, we'll break down the basics, explore how Bitcoin works, and discuss why it matters in today's digital age. Whether you're a complete beginner or just looking to brush up on your knowledge, you're in the right place. Let's start by understanding the origins and core concept of Bitcoin. Bitcoin was introduced in 2009 by an individual or group using the pseudonym Satoshi Nakamoto. The idea was to create a new kind of money, one that exists purely in digital form and isn't controlled by any government or central authority. This innovation came as a response to the global financial crisis, aiming to provide an alternative to traditional banking systems. The release of the Bitcoin white paper outlined a vision for a decentralized, peer-to-peer electronic cash system. This marked the beginning of a new era in digital finance. So, what is Bitcoin? At its core, Bitcoin is a digital currency, often called cryptocurrency. Unlike traditional money, which you can hold in your hand, Bitcoin exists only online. It's not printed or minted by any government. Instead, it's created and managed through a network of computers using cryptographic techniques. This makes Bitcoin both unique and secure. People can send and receive Bitcoin over the internet, making it a truly global form of money. Bitcoin operates on a technology called blockchain. Think of blockchain as a digital ledger, a record book that's open to everyone but can't be easily altered. Every time someone sends or receives Bitcoin, the transaction is recorded on this ledger. The blockchain is maintained by a network of computers, called nodes, spread all over the world. These nodes work together to verify and record transactions, ensuring the system remains secure and transparent. Let's take a closer look at blockchain. Imagine a chain of blocks, where each block contains a list of transactions. Once a block is filled, it's added to the chain in a way that can't be changed without altering every block that comes after it. This makes blockchain incredibly secure and trustworthy. It's the backbone of Bitcoin, ensuring that every transaction is recorded and verified by the entire network. One of Bitcoin's most important features is decentralization. Unlike traditional banks or payment systems, there's no single company or government in charge of Bitcoin. Instead, it's run by a distributed network of computers. This means no one can shut it down or control it completely. Decentralization makes Bitcoin resistant to censorship and interference, giving users more freedom and control over their money. When you send Bitcoin to someone, the transaction is broadcast to the network. Computers called miners compete to verify the transaction by solving complex mathematical puzzles. Once verified, the transaction is added to the blockchain. This process ensures that every Bitcoin transaction is secure, transparent, and can't be reversed. It's a bit like having a digital notary that checks every transfer. Miners are a crucial part of the Bitcoin network. They use powerful computers to solve mathematical puzzles that validate transactions. In return for their work, miners are rewarded with new Bitcoins. This process is called mining, and it's how new Bitcoins are created. Mining also keeps the network secure by making it extremely difficult for anyone to tamper with the blockchain. Unlike traditional currencies, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoins in existence. This limit is built into the code and can't be changed. The idea is to make Bitcoin scarce, like gold, which helps protect its value over time. As more people use Bitcoin, the limited supply can make each coin more valuable. Bitcoin is different from the money you use every day. Traditional money is issued by governments and controlled by central banks. They can print more money whenever they want, which can lead to inflation. Bitcoin, on the other hand, is decentralized and has a fixed supply. This makes it immune to inflation caused by overprinting. It's also borderless, meaning you can send it anywhere in the world without needing a bank. There are several ways to get Bitcoin. You can buy it on an exchange using traditional money, receive it as payment for goods or services, or mine it by helping validate transactions. Many people start by creating a digital wallet, which is like an app that lets you store and manage your Bitcoins. Once you have a wallet, you can buy, send, and receive Bitcoin easily. A Bitcoin wallet is a digital tool that lets you store, send, and receive Bitcoins. It doesn't actually hold coins like a physical wallet. Instead, it stores special keys that let you access your Bitcoin on the blockchain. There are different types of wallets, including mobile apps, hardware devices, and even paper wallets. Choosing the right wallet depends on your needs and how you plan to use Bitcoin. Every Bitcoin wallet uses a pair of cryptographic keys, a public key and a private key. The public key is like your email address. You can share it with others so they can send you Bitcoin. The private key is like your password. It must be kept secret because anyone with your private key can access your Bitcoins. Keeping your private key safe is crucial to protecting your funds. Sending Bitcoin is simple. You enter the recipient's public key, specify the amount, and confirm the transaction. The network then verifies and records the transaction on the blockchain. Transactions can take a few minutes to process, depending on network activity. Once confirmed, the Bitcoin is transferred securely to the recipient's wallet. When you send Bitcoin, you usually pay a small transaction fee. This fee goes to the miners who process and verify your transaction. Fees can vary depending on how busy the network is. Higher fees can help your transaction get processed faster, while lower fees might mean waiting a bit longer for confirmation. Bitcoin transactions are transparent. Anyone can view them on the blockchain. However, your identity isn't directly tied to your wallet address. This means Bitcoin offers a level of privacy, but it's not completely anonymous. Authorities can sometimes trace transactions back to individuals, especially if you use exchanges that require identification. Bitcoin is considered very secure thanks to cryptography and the decentralized nature of its network. However, users must be careful to protect their private keys and use trusted wallets. Hacks and scams can happen if you're not vigilant. Always double-check addresses and never share your private key with anyone. Mining is the process that keeps Bitcoin running. Miners use computers to solve puzzles that validate transactions and add them to the blockchain. This process is energy-intensive and requires specialized hardware. As a reward, miners receive new Bitcoins and transaction fees. Over time, mining becomes more difficult, and the reward for mining new blocks decreases. Every 4 years, the reward for mining new Bitcoins is cut in half. This event is called a halving. Halvings help control the supply of Bitcoin and are a key part of its design. As rewards decrease, it becomes harder to earn new Bitcoins, which can affect the price and mining activity. Bitcoin's price can change rapidly. It's known for its volatility, sometimes rising or falling by large amounts in a single day. This is due to factors like supply and demand, news events, and investor sentiment. While some see this as a risk, others view it as an opportunity for profit. People use Bitcoin for many reasons. Some see it as a way to invest and potentially earn profits. Others use it to send money across borders quickly and cheaply. Bitcoin can also be used for online purchases, donations, or as a hedge against inflation. Its decentralized nature appeals to those who want more control over their money. Like any technology, Bitcoin comes with risks. Prices can be unpredictable, and there's always a chance of losing money. Security is another concern. If you lose your private key, you lose access to your Bitcoins. Scams and hacks are also possible, so it's important to use trusted services and stay informed. The legal status of Bitcoin varies around the world. Some countries fully embrace it, while others restrict or even ban its use. Regulations are constantly evolving as governments try to understand and manage the impact of cryptocurrencies. Before using Bitcoin, it's important to check the laws in your country. In many places, using or trading Bitcoin can have tax implications. Governments may treat Bitcoin as property, meaning you could owe taxes on profits from buying and selling. It's important to keep records of your transactions and consult a tax professional if you're unsure about your obligations. Bitcoin has sparked a revolution in the world of finance. It's inspired the creation of thousands of other cryptocurrencies and new financial technologies. Banks and payment companies are exploring blockchain to improve their services. Bitcoin's influence is felt in everything from online payments to global remittances. Bitcoin mining uses a lot of electricity, which has raised concerns about its environmental impact. Some miners use renewable energy, but others rely on fossil fuels. The debate continues about how to make Bitcoin more sustainable while maintaining its security and decentralization. Bitcoin has a vibrant global community of developers, miners, investors, and enthusiasts. This community helps maintain the network, develop new features, and promote adoption. Online forums, conferences, and meetups are common, making it easy to connect with others who share an interest in Bitcoin. Bitcoin software is open source, meaning anyone can view, use, or improve the code. This transparency builds trust and allows for constant innovation. Developers around the world contribute to making Bitcoin better and more secure. Sometimes, disagreements in the community lead to changes in the Bitcoin software called forks. A fork can create a new version of Bitcoin with different rules. Some forks have resulted in entirely new cryptocurrencies, like Bitcoin Cash. Forks are a way for the community to experiment and innovate. Bitcoin can be used in many ways. Some people use it as a store of value, like digital gold. Others use it for everyday purchases, online payments, or sending money abroad. Businesses are increasingly accepting Bitcoin as payment, and some charities even accept donations in Bitcoin. In some developing countries, Bitcoin is used as a way to access financial services when banks are unreliable or unavailable. It can help people save money, send remittances, and protect against local currency inflation. Bitcoin's borderless nature makes it especially useful in places with limited banking infrastructure. Sending money across borders can be expensive and slow with traditional services. Bitcoin allows people to send funds quickly and with lower fees. This is especially valuable for families who rely on remittances from relatives working abroad. Bitcoin's speed and cost-effectiveness are changing the way people move money internationally. Despite its advantages, Bitcoin has some limitations. Transactions can be slow and expensive during periods of high demand. The network can only process a limited number of transactions per second. Developers are working on solutions, but these challenges remain important to consider. To address Bitcoin's limitations, developers are working on scaling solutions like the Lightning Network. This technology allows for faster and cheaper transactions by processing them off the main blockchain. Scaling solutions aim to make Bitcoin more practical for everyday use. While Bitcoin offers some privacy, other cryptocurrencies called privacy coins go further. Coins like Monero and Zcash are designed to make transactions completely anonymous. These coins use advanced cryptography to hide transaction details, appealing to users who want maximum privacy. Bitcoin's future is still being written. Some believe it will become a global reserve currency, while others see it as a niche investment. As technology evolves and adoption grows, Bitcoin's role in the financial system could continue to expand. Its impact on money, technology, and society is likely to be felt for years to come. Bitcoin was the first cryptocurrency, but now there are thousands of alternatives, known as altcoins. Each altcoin has its own features and use cases. While Bitcoin remains the most popular and valuable, some altcoins offer faster transactions, greater privacy, or unique applications. The world of cryptocurrency is diverse and constantly evolving. Bitcoin's security relies on a combination of cryptography, decentralization, and economic incentives. The network is protected by miners who have a financial stake in keeping it secure. Attacking the network would require enormous resources, making it highly resistant to fraud and hacking. Bitcoin is often described as pseudonymous. This means transactions are linked to wallet addresses, not real names. While this offers some privacy, it's not complete anonymity. With enough information, it's sometimes possible to connect addresses to individuals, especially when using regulated exchanges. Bitcoin's invention has influenced technology far beyond finance. Blockchain technology is now being used in supply chains, voting systems, and digital identity projects. The idea of decentralized, trustless systems is inspiring innovation across many industries. Bitcoin has become more than just a technology, it's a cultural phenomenon. It's sparked debates about money, privacy, and freedom. Communities have formed around the world, and Bitcoin has even influenced art, music, and literature. Its impact reaches far beyond the financial sector. Despite its success, Bitcoin faces challenges. Regulatory uncertainty, technical limitations, and environmental concerns are ongoing issues. The community continues to work on solutions, but these challenges will shape Bitcoin's future development and adoption. Bitcoin is used by people all over the world, regardless of borders or local currencies. Its global reach makes it a powerful tool for financial inclusion and innovation. As more people gain access to the internet, Bitcoin's potential to connect the world grows even larger. To sum up, Bitcoin is a digital currency that operates without a central authority. It uses blockchain technology to ensure security and transparency. With a fixed supply, decentralized network, and global reach, Bitcoin has changed the way we think about money. While it has its risks and challenges, its impact on finance and technology is undeniable. As we look to the future, Bitcoin's story is still unfolding. Its technology, community, and influence continue to grow. Whether you're interested in investing, using, or simply learning about Bitcoin, understanding its fundamentals is the first step. Stay curious, keep learning, and watch as Bitcoin continues to shape the world of finance and beyond.